Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Right now, the net asset of my account is $71,910.31. Today's PL is a gain of 0.08%. Today, Apple closed up 0.3% to 188.01. SQQQ closed down 0.24% to 16.3, and SPY closed up 0.21% to 449.68. United Natural Gas closed up 1.55%. Today, the industries generally performed mediocre. Dow Jones Industrial Average closed up 0.47%, Nasdaq Composite closed up 0.07%, and S&P 500 closed up 0.16%. Today, the industries generally varied in between a gain of 1% and a loss of 1%. Today, the PIMCO chief investment officer said that the inflation is far from resolving, and the market enthusiasm for the rate cut in 2024 is not valid. The chief investment officer of PIMCO suggested that the U.S. inflation has generally cooled last month. However, the Fed may have shifted its policy stance due to the cooling inflation, but the inflation getting the right direction is from reaching the central bank's 2% target, and the 2% it is still 3.2% is still a far away point from the 2% target that the Fed is heading towards. And then the yield on the 10-year Treasury note rose 9 basis points to 4.954% after it's hitting its lowest level since September. The latest data shows that the U.S. consumer demand remains resilient as the holiday season approaches, but producer prices fell by the most since 2020. In his managed fund, the $51.1 billion total return fund rose 2.2% in the past month and 1.1% in 2023. The data showed the funds that he co-manages with Joshua Anderson and Alfred Morata are up 2.1% over the past months and are returning 4.9% in 2023. Over a 3-year basis, the fund's annualized 0.5% outperformed its 88% competitors. The return figure also highlights the difficult times for bond managers after a historic decline in 2022. If he's right, then the rise in the bond market and expectations that the Fed's next move will cut interest rates as early as May could all prove wrong, given the Fed's firm determination to restore price stability. Fed Chairman Jerome Powell said that inflation once gave us some illusion. He added that the Fed will continue to treat cautiously and address the risk of being misled by months of good data and the risk of excessive tightening. For Iverson, he is ready to cut his interest rate exposure if the bonds rise too much, after the company hit a multi-year high last month. As the higher interest rate also rise our interest rate risk. His attitude towards managing its $1.7 trillion in asset is a 2 to 3 year time frame. The short term is noise. This is all he said today. And thank you for listening. Don't forget to subscribe and see you next episode.